Bitcoin has changed the nature of the game. It's changed the rules. It's a fundamental financial innovation. It's a technological innovation. It's something like gunpowder or the Gutenberg press or the airplane. It changes the rules of the game that you're playing. The solution was gold. Buy your gold, get in a bunker. We got a major problem coming. But now we've actually got a solution with Bitcoin, with distributed consensus, with blockchain technology, and we're building it out as fast as we can.
The world faces peak gold according to Goldman Sachs, but one geologist who's discovered more than 30 million ounces of gold says he knows where to find America's hidden gold deposits. Featured on the History Channel's How the Earth Was Made, this expert gold finder could be on the verge of a massive gold strike. Even a billion-dollar gold giant has engaged this small market cap company to use their proprietary technology.
For the thrill of gold discovery with a new edge in Nevada, visit crushthestreet.com/gold. Hello, everyone, and welcome into crushthestreet.com. This is the first time I'm interviewing Trace Mayer here at crushthestreet.com, but I met him actually a few years ago, and he personally told me and pounded the table when Bitcoin was at $10 a coin, and I watched it go to 30. And I saw him again at another conference, and he was pounding the table again, saying, hey, Bitcoin is a good buy. And from there, Bitcoin went to over 1,000. The infrastructure has grown tremendously, and he is a pioneer. He's an entrepreneur within the Bitcoin arena. And his name is Trace Mayer. He holds degrees in accounting and law and has studied Austrian economics. He started recommending Bitcoin around 25 cents and funded core blockchain infrastructures, including Armory, which provides the foundational security for Bitcoin wallets, BitPay, the largest Bitcoin merchant processor, and Kraken, the largest Bitcoin Euro exchange, and a major worldwide liquidity provider. He hosts the extremely popular Bitcoin Knowledge podcast, where he interviews the top people in the Bitcoin world. Trace Mayer, thanks so much for joining me today.
Oh, thanks, Kenneth. Glad to be here, and glad to talk with you guys again.
Absolutely. Like I said, it's been some time now, and man, you're just in the fire in terms of what is going on with Bitcoin. So, a lot of people are in the precious metal space, and Bitcoin is very much, it has a lot of the qualities that people seeking out precious metals, concerned about the economy, want, anonymity, all these things that are very attractive to people who like precious metals. And so I wanted to have you on to give us an update on what is going on in the Bitcoin space.
Yeah, so first, the world is in commotion like never before. But Bitcoin, it's in forward motion like never before. We have just tremendous amounts of financial innovation going on. We have tremendous amounts of software getting written, services getting built, utility being added, and this is very exciting. When I started my blog Run to Gold, that was the answer, right? Pre Lehman Brothers, pre Bear Stearns. Looking at the system, looking at the central banks, looking at the entire system, the answer was gold, right?
Right.
But about a year after I started my blog, Satoshi released Bitcoin, and Bitcoin has changed the nature of the game. It's changed the rules. It's a fundamental financial innovation. It's a technological innovation. It's something like gunpowder or the Gutenberg press or the airplane. It changes the rules of the game that you're playing. And now what we're seeing is that it's getting built out to become a solution to this intractable problem that really doesn't have a solution. The solution was gold. Buy your gold, get in a bunker. We got a major problem coming. But now we've actually got a solution with Bitcoin, with distributed consensus, with blockchain technology, and we're building it out as fast as we can. And it's really getting exciting. Seeing some of the stuff that's happening.
So what is happening? And for people who are skeptical about Bitcoin, I mean, what is going on in the infrastructure that is solidifying Bitcoin as a viable solution?
Yeah, that's the $100 billion question, right? Like, or the trillion and trillion dollar question. What's happening is we've got this new technology, distributed consensus or blockchain technology, using a distributed peer-to-peer network that's censorship resistant, that's immutable, meaning you can't change it. It's the first practical implementation of triple entry bookkeeping, where you have a debit, a credit, and then this network confirms that transaction actually happened. It's allowing people to organize capital in entirely unique ways. Pretty much all the major banks are totally on board with blockchain technology. They're still sniffing around Bitcoin, and it's the first. So they're kind of thinking like, is it going to be Bitcoin? Is it going to be something else? I would argue that it's going to be Bitcoin for the same reason that TCP/IP has taken root with the internet. The reason SMTP has taken root with email, because what we're talking about is the ability to transfer value over a communications channel. Bitcoin is really just an internet protocol. It's another layer on the internet. We currently have 50 to 60 protocols in 7 different major areas that form the internet as we use it, and layers of the internet. And Bitcoin is another layer of the internet, and then we're going to build additional protocols within that layer. And so when we look at the core protocol of Bitcoin that's getting built out, we've had the scale of what's happened with something that's called segregated witness is just tremendous in terms of being able to increase the extensibility of Bitcoin, being able to increase the rate of speed at which we develop new features in Bitcoin. It's going live, and it's actually just went live last week in testnet. I interviewed Eric Lombroso for my podcast. It's going to get published tomorrow, where we talk a little bit about this. But that's what I'm talking about. I'm talking about Bitcoin at its very core is financial innovation. You know, we had credit cards 80 years ago. We had the ATM 40 years ago. But otherwise, like, for the most part, we haven't really had much innovation when it comes to financial technology. Bitcoin is leading the charge. It is the tip of the spear when it comes to financial innovation. And last time I checked, we don't really use horseless carriages. We use cars. And now cars are getting innovated too, with things like Tesla and self-driving cars. And now we've got this drone that flies people around, like the EHang 184, whatever it is. That's what's happening. We're fundamentally changing the technology and the economics that undergird our financial and monetary systems. And we're hopefully creating it in a way that is going to provide a solution to this massive mess that the current system is completely forward. Everything has just gone haywire. Central banks have lost control of liquidity. The central banks don't have the gold they claim to have. China burned through $500 billion of their forex reserves trying to defend this. It's just done, right? The current system is just completely done, and we have to find a solution or a replacement to this. And Bitcoin, hopefully is going to be one of those solutions, or perhaps the solution. And that's where it gets really interesting, because then Bitcoins could be worth hundreds of thousands of dollars a piece, or even millions of dollars a piece.
Right.
And having started at 25 cents 7 years ago, and now being worth about $400. It would surprise people, and I've seen Bitcoin surprise people again and again and again. I recommended it at a quarter; it ran to $30. Then it crashed to $2. Then Daniel and I, we had an interview and talked about it. It was like $10. It ran to $266. Within a couple months, and then it crashed down to $60, and then it ran to $1,200. So Bitcoin just keeps surprising people, and it's very exciting, because that means there's a lot of opportunity for wealth transfer, because we have all this asymmetric knowledge and information regarding it.
Trace, one of the things that money is supposed to be is a store of value, and I know that fiat currency is not that definition. I mean, we know that the dollar has lost 99% of its purchasing power since the Federal Reserve. So I'm not saying that is the true form of money. I don't believe that. But with the way Bitcoin trades, Is it fair to say that it is a store of value, or is it more of a speculative investment at this point until it actually reaches a point of price stability?
Yeah, I mean, I would agree with that. I mean, currently it's $6 billion of money supply, basically. But what we're talking about is we're talking about something where only one application of it is as a store of value. Gold has tons of different applications. You know, one is a store of value, bars in the vault, but you can put it in your teeth, you can put it in electronics, in your computer. You got all these other different applications for gold besides just store of value, right? It's the same with Bitcoin. And so when we look at subjective value theory and we look at like the marginal value theory and why people value one good over another good, it's the same thing with Bitcoin. And what we're talking about is, you know, something that can be transferred, where you can use it to transfer value over a communications channel. That's one of its primary value propositions. I think another value proposition that's just the other side of the coin of that is the speculative demand, because Bitcoins, they're limited in amount by their intrinsic characteristics of cryptography and math, just like gold is limited in amount by its intrinsic characteristics or chemical law. And then we also have this extensibility. So Bitcoins are much more portable than gold could ever hope to be. You know, they're a pure number. They're data themselves, as opposed to something that's centralized at a point in space and time, like gold is. And so you have a lot of these different characteristics. Some people buy it because it's a store of value. Other people buy it for the transactional demand or for the actual things that they can do with it. And that's very interesting, because the price elasticity of demand for that particular use case, the actual price of the Bitcoins themselves is completely irrelevant. Whether it's a nickel or $10,000 a Bitcoin, you still have this transactional demand, which is also at the edges where the prices is set. And so then it really just comes down, when we're talking about price, it just comes down to the speculative demand, which is very fickle. You know, everybody likes to chase the rabbit. They like to chase it up. They like to chase it down. But eventually, you know, we'll get the money flows, the forex, the volume, the liquidity. You mentioned Kraken in the intro. You know, that's real volume. You know, you want to sell $1 million worth of Bitcoin, you can actually do it today. You want to sell $100 million of Bitcoin today? No, there's not really that much liquidity for it yet. And that's where the big value proposition is with our fiat currencies, you know, because you can sell $100 billion of treasuries or euros or yen for yuan or whatever, right? Like the gold market is billions and billions of dollars traded every day for fiat currencies. That's a big value proposition, having that liquidity, because people use these instruments for so many different reasons. It's hard to say, oh, you only use it for that one reason. You know, people use instruments for lots of different reasons.
Let's talk about government and government regulations. This is an issue. If people are going to buy into Bitcoin, can the government stop it? And also maybe touch on how easy or hard is it for people to get into Bitcoin today compared to maybe a few years ago, thanks to these government regulations and involvement in the industry?
Yeah, so first, I do think it would technically be possible for them to stop it, but it would be very costly. I don't know that the return on investment from trying to stop it would even be there or even be remotely close. Because at the end of the day, we're talking about math, we're talking about cryptography, and last time I checked, you can't really shoot a math problem with a gun. Like that's that's not how you solve a math problem, right? Like that's not how you compromise it or break it.
But the Fed could print, and they have the printing press.
Well, yeah, but we're talking, but we're talking about the actual network itself. So yeah, you could use the printing press to like acquire lots of computer processing power or things like that. Yeah, I'd agree with that. And you could probably compromise Bitcoin in one way or another doing something like that. But we would probably see some type of a mutation from this blockchain technology that would be mutated in a way that would foreclose or protect against those types of attack surfaces or attack vectors. You know, the market is very creative. So, you know, I think the governments, for the most part, they kind of realize this. They're like, you know what, we tried fighting file sharing, but BitTorrent came out, and that was the end of that. And Bram Cohen, by the way, who came up with BitTorrent, he's now very heavily involved in working on Bitcoin-related stuff. He finds it incredibly fun, which a lot of the brightest minds do. And so that intellectual combustion that comes from, a lot of these people like Dr. Adam Back, who is cited in the Tor white paper. He's also cited in the Bitcoin white paper. People like Bram Cohen, Michael Novogratz, he's the CIO at Fortress, $55 billion hedge fund. He said, one of his friends from Princeton is working on Bitcoin full time. He's like, and that guy was the smartest guy in the class. He's like, all the smartest people in the room, they're working on Bitcoin stuff. So it does make you wonder, like, well, what do they see in it? Why are they tinkering with it? But the governments are really coming along. For example, the CFTC is going to be holding a hearing later this month about about Bitcoin and being able to use it with financial derivatives contracts, like forwards, futures, puts, calls, stuff like that. We're also seeing things like the Bit license, which I think is a big piece of garbage, but hey, they're recognizing it. They're trying to figure out how to regulate it. The Isle of Man, on the other hand, they've passed and signed into law the Proceeds of Crime Act and the Designated Businesses Act, which enable the use of blockchain technology and Bitcoin pretty much for any type of financial use, whether it's trusts or insurance companies or banks or whatever. Like they've provided the regulatory framework for that to happen. And so, I think that. I think we're going to see it getting more and more adopted because, like, one, we understand kind of what it does, and two, we're deciding, hey, you know what? I think we should be a pro math and a pro science society. So we're not going to make more numbers illegal. If you go to Wikipedia and look up illegal primes, there are actually prime numbers that are illegal to possess. I think we're getting away from that because we just realize it's kind of silly to make things like the number 0 illegal, right? Like Islam did that for hundreds of years, and it retarded their civilization and their scientific pursuit. So it does raise some of these core questions about, like, what type of a society do we want to live in? But the U.S. Supreme Court, they already ruled in the mid-90s that cryptography was protected under the First Amendment as freedom of speech. So there's very strong legal protections for Bitcoin. And at the end of the day, Bitcoin is just a bunch of numbers. Literally, like numbers. And so, like, do we make numbers illegal? Yeah. And how do you enforce it if you do? I mean, talk about the Third Reich would look like a very, very nice and caring regime compared to a regime that wants to make numbers illegal.
Right. No, I do remember you talking about that numbers versus like a value, or calling it money, and actually even some of the tax implications on that.
Yeah, because I mean we're literally dealing with a number, like control of the bitcoins, control of the private keys. That's literally a number, and that's what our software at Armory does. It helps you create and store and secure that precious number. Just like gold is a precious metal or precious atoms, bitcoins are really just precious numbers. And I mean, what are we going to do? Like, make numbers illegal?
Right.
I mean, I don't think that's very feasible. We have to use numbers and math for everything. I mean, our modern and complex world is ruled by math. The algorithms, the high-frequency trading, like all the entire way that we secure the internet. Amazon.com is not possible without using the same technology that you use with Bitcoin. Logging into your online banking, all of this stuff uses the exact same cryptography, asymmetric cryptography. Things like SSL, EXTA, elliptical curve digital signature authority. I mean, so when we're talking about, we want to make this illegal, I mean, what does that really mean? It means making numbers illegal. And the U.S. Supreme Court has already ruled that we're a pro-numbers, pro-math, pro-science, pro-cryptography society, and that's protected under the First Amendment as freedom of speech. So, trying to make this stuff illegal, it's going to be very, very hard just to do that from a statutory or a legal perspective. I mean, you're going to have to like pass some type of constitutional amendments in order to give that type of authority to the government. I just don't see that happening. I mean, how would you possibly get any public support to make math illegal? I mean,
Right,
I just
right.
don't see that happening.
Yeah, well, they wouldn't call it that, of course. They would call it, hey, we need to be able to tax the money that is being circulated. We need to
Well,
be
I'm
able
not
to.
saying they aren't going to try and tax the bejesus out of it. Like, what Ronald Reagan say? Like, if it moves, tax it, right? If it keeps moving, tax it some more. So, I mean, like, yeah, they're gonna, and the IRS has actually put out guidelines on how we should treat Bitcoin for tax purposes, and so is the European Central Court actually ruled that it was not subject to VAT, which is a huge move. And in the UK, they tried to they implemented VAT on it, and then they actually rescinded that like 6 months later because the industry squawked, and the financial industry that they really want to have the financial innovation happen in London, and so they said, oh wait, our bad, it's not really subject to VAT. And like I was giving a presentation at the British consulate in New York City about Bitcoin, and guess what?
What's
London is poaching all of the startups out of New York. They're like, hey, bring all your startups to London. We want to encourage the growth of this industry in London. We got rid of the VAT, so that we don't have all these tax implications. We don't have some stupid thing like the bit license. Like, bring your businesses out of New York and bring them to London. And guess what? The companies are going. The companies are leaving. They are fleeing New York. Like, all the Bitcoin companies are just fleeing New York. They're running over to London. They're running to San Francisco. They're running to Austin, Texas. It's actually really kind of scary because the financial industry has lost how many hundreds of thousands of jobs over the last couple of years. Where are the jobs being created? They're being created in fintech. What's the biggest, brightest, most active area of fintech? It's Bitcoin and blockchain technology. And New York passed legislation with this bit license that's running all of the startups out of New York. I mean, it makes you wonder like whether New York's going to retain their importance in the financial industry or not. I mean, they're all going to London. And if they're not going to London, they're going to San Francisco or Texas. And if they're not going there, they're going to freaking Singapore. Because Singapore has been very encouraging. Singapore and Hong Kong have been very encouraging for Bitcoin technology. And they're also going to Beijing and Shanghai over to China. So, I mean, like... And this has precedent, right? Because when the car got invented, Britain they passed a law that somebody had to walk in front of the car with waving this big red flag, like watch out for the dangerous horseless carriage, right? They passed that law, and guess what? Where did all the cars get built? They got built in America, and guess what? The UK still doesn't have a major car producer. Jaguar? I mean, really? Like, look where the big car industry like footprint is. It's in Germany with BMW, Mercedes. It's in the U.S. with Ford and whatnot. It's in Japan with Toyota. It's not. The UK isn't known for any car manufacturers, right? And so is the U.S. going to be known for any blockchain technology industry? Or is it all going to get driven away through regulation over to London and Singapore and Shanghai? I mean, it's a good question. It really is.
Trace, talking about Bitcoin's viability and its long-term position, is it too late for alternative cryptocurrencies to come along, whether it's a copy of Bitcoin or something different, to eventually catch up and take over where Bitcoin is as in the digital currency sector? Or is Bitcoin essentially the gold standard for digital currencies now and forever because of the infrastructure that's being built out?
That's a very critical and important question to ask. And so I'm going to try to unpack it in a fairly logical and rational way. The conclusion would be, I seriously doubt that any other protocol will be able to surmount the network effects that Bitcoin has acquired. Nevertheless, it is possible. I just don't think it's very probable. The reason is I've identified 7 distinct network effects that are all taking place at the same time, and also some of the incumbents, for example, Blythe Masters with Digital Asset Holdings, she was asked the same question, and she said, we're blockchain agnostic, but we think it's going to be Bitcoin, so we're building everything for Bitcoin. And then also on that panel was the CIO of NASDAQ, and he had also been the CIO of eBay. And he said, I agree with Blythe. We're blockchain agnostic. We're building everything, but let me just tell you, it's going to be Bitcoin. And he said, we saw this with PayPal, and with PayPal and eBay, and Yahoo spent millions and millions of dollars trying to come at us in the auction business, and they lost. And lots of other companies spent millions of dollars, and they lost too. And with eBay, there were only the two network effects, the merchants and the sellers, and then PayPal as the payment method system. And that proved insurmountable for anybody to challenge that dominant position. So let's look at this as, in this case, with Bitcoin. We're talking about an internet protocol, 7 distinct network effects all taking root at the same time. The first one is speculation. People buying it, because they want to make a quick buck on it, using it as a store of value, whatever. Particular utility being built out in there, things like Armory, which help you secure your Bitcoins. You got to secure them in order to speculate on them, right? Exchanges, so Kraken, Bitstamp, Bitfinex, you need to be able to trade your Bitcoins for dollars, euros, yen, whatever. And then, so that's speculation. Next would be merchants. Merchants are going to accept Bitcoin merely because speculators hold Bitcoin. So this is a second network effect, second order network effect. BitPay is a good example of a payment processor. We have major internet giants like Rakuten, Microsoft, Dell, Dish Network, all these people accepting Bitcoin. We have over 100,000 merchants that accept Bitcoin. With BitPay, we have integrations with things like Shopify, which anybody who's got Shopify-enabled web checkout, and there are hundreds of thousands of merchants that have that, they can instantly be able to accept Bitcoin pretty much. So merchants accept Bitcoin because speculators hold it. The next would be the third order network effect. That would be consumers using Bitcoin solely because merchants accept it. An example of this would be Purse.io. Purse.io, you basically go and you make a wish list on Amazon, and then you import the wish list to Purse, and then you set the amount of discount that you want to receive, and you put your Bitcoins into escrow, and then somebody comes along and they're like, I want to buy those Bitcoins, so they buy your Amazon cart, have it shipped to you, and after you receive your items, then the Bitcoins get released from escrow to those people. Well, guess what? The average discount on Purse is 18%. So because people choose to pay with Bitcoin instead of paying with dollars or paying with a credit card or paying with a gift card or whatever, paying with Bitcoin, they save 18%. People using Bitcoin, they saved $500,000 in 2015 on Purse, buying stuff off Amazon. Why would you use anything else to buy stuff off Amazon? I mean, you don't even have to you can hate Bitcoin. You don't even have to hold Bitcoin very long. You just hold it enough to get the bid, and you save 10 to 18%, 35% in some cases. I've saved 35% on some of my orders. So that's consumers using Bitcoin solely because merchants accept it. The fourth network effect is the miners, or the security of the network. We're approaching what's called 1 exahash. It's just an unfathomable amount of processing power that secures the Bitcoin blockchain. We're talking like tens and tens of thousands of times more processing power than the 500 largest supercomputers in the world combined. Everybody thinks it's just real easy to start up one of these blockchains. No, it's not. You can get squashed by computer processing power. You have to be able to defend yourself against Google or Microsoft or the NSA, right? Well, guess what? Bitcoin has so much processing power securing that blockchain. I just don't see any other blockchain being able to be anywhere near as secure, which leads to the fifth network effect, which are developers, software developers. They're going to build their applications and their utility and all of this stuff. They're going to build it on the most secure blockchain. Why build it on a less secure blockchain? Right? So that's a fifth network effect. That's developers having to spend all the time and the effort to get acquainted with a code base. Because you can think of developing software, it's kind of like playing Legos with words, right? And so what you have to do is you have to load tens of thousands of lines of code into your head so that then so that you can then play Legos with it. Like, that's how software gets developed. Getting people familiar with a code base, writing libraries, so that people don't have to reinvent the wheel. All of this stuff, developers, guess what? They're all building on Bitcoin. They're not building on other blockchains because they're not as secure. They don't have as many merchants accepting it. They don't have as many speculators holding it, which all this stuff goes into the price of Bitcoin. Then we've got the sixth network effect, which I already mentioned earlier, the CFTC holding a meeting about using Bitcoin for futures and forwards and puts and calls and all that stuff. Well, that's the financialization network effect. That's where Wall Street really comes in and starts building these very creative, very useful in a lot of ways financial instruments. So that's the sixth network effect. We've already got regulated and approved swap execution facilities to write different derivative contracts for Bitcoin. And then we get to the seventh network effect, and I haven't really seen any. There hasn't really been any growth in this network effect yet. It's still very much a theoretical network effect, but what it is it's the world reserve currency. It's the settlement currency type network effect. It's where people, instead of cashing out into dollars or cashing out into euros, they cash out into Bitcoin. Right? Instead of trading like all the oil in an oil tanker for dollars, you trade it for Bitcoin. Instead of trading your piece of real estate for euros or yen, you're trading it for Bitcoin. You're settling into Bitcoin. But we are seeing this within the Bitcoin industry. And one of the largest software development houses, Blockstream, they've released this thing called Liquid, and Liquid connects all the Bitcoin exchanges, and it enables the Bitcoin exchanges to move customer balances trustlessly and pretty much instantaneously among each other. And the effect that is having is that in order to for these exchanges to settle amongst each other, they settle using Bitcoin, not using wire transfers. Wow. Right? So that's the first kind of green shoots of the world reserve settlement currency application, is this Liquid network among the Bitcoin exchanges. So now each of the Bitcoin exchanges, they all hold dollars or euros or whatever, but when customer A wants to move their balance to exchange B, they use the Bitcoin pipeline, they use this Liquid network. And instead of using wire transfers, we were using wire transfers for 5 or 6 years, right? But Bitcoin has now supplanted wires and dollars and euros and all this stuff for that network effect. So, we got 7 network effects all taking place at the same time. People spent millions of dollars like trying to go after eBay, and they failed. And eBay only had 2 network effects. And you get this cumulative exponential entrenchment that comes from having network effects all taking place. So do I think some other project, some other coin is going to be able to supplant these network effects? I think it's highly, highly improbable and unlikely. And if anybody has any idea of a project that does, please let me know, because I will buy a lot of that, right? Because it's probably highly undervalued. But I mean, I would love to know, because, hey, look, I'm blockchain agnostic. At the end of the day, I want to increase my purchasing power. I want to be able to buy more stuff. I want to, right? Like, right. Whether it's BMW or Mercedes or Tesla, like at the end of the day, I want the best car and I want the best return. Like, I don't care whether I own Amazon stock or Google stock or Ford stock or whatever. I want to own stock that's got the best return and the safest return and the best risk-adjusted proposition. And so I think it's the same way with Bitcoin or any of these other projects. But I just don't see any other project coming anywhere close to Bitcoin in that sense.
I love the way you described it, the network effect.
Got it tied up.
Yeah, I love the way you described the network effect and how Bitcoin is just, it's got that network effect in 7 different aspects going for it. So that's amazing. So Trace, I wanted to ask you about the block size increase debate. Can you just give us a little bit of understanding of what this is and how urgent or or not urgent is this for the Bitcoin infrastructure?
Yeah, so like anybody not in the Bitcoin industry looking in, it must just be like, what is going on with this thing? I think it's actually shaken a lot of confidence. A lot of people have like not bought Bitcoin or not made VC investments because of it. Me personally, I don't think it's a very big issue at all. I don't think it's very timely even. Like we don't have to act particularly fast. I've interviewed pretty much all the top people in Bitcoin, and we've discussed this and talked about it. I would reference specifically to I did an interview between Dr. Adam Back and Gavin Andresen, and it's 80 minutes, and we go very thoroughly in depth into this issue. So anybody who wants to learn more, like, go listen to that. But basically, what we're talking about with a computer protocol is it's a set of rules that the computers follow. And within Bitcoin, one of these rules is the size of the block. And currently that rule is set to 1 megabyte. And that limits the throughput, or the number of transactions that can be included in a block. Right? And so if we want Bitcoin to be used by more people and it needs to have greater capacity, we need to increase the size of that block. Well, if we increase the size of the block, then it increases the costs of all the different nodes and software validating the transactions, making sure that they're actually valid. It could impact the security, that fourth network effect. So it's not as easy as just changing like a 1 to a 2 or even a 1 to an 8 or something. I mean, there's a lot that has to kind of be taken into consideration. One of the reasons I don't think it's very urgent is that currently the block size is about 1 megabyte. We currently use about 2/3 of that, so about 600 kilobytes of it. And out of that, so we're only using 2/3 of the block size currently. And out of that, something like 60% of the transactions that are actually sent on the Bitcoin network are for $1 or less. And so it makes you wonder, like, do these transactions even have much real economic substance to them? Right?
Okay.
And really, also what'll happen is, even if the block size is reached, you can pay more transaction fee to get a higher priority to be included into the block. So if you have a really important use case, you just pay more money and you get to the front of the line, right? And then it becomes kind of like an auction. So I think that's a good way the market is going to be able to sort out, like, who matters and who doesn't, right, for getting into the block size, because who matters will be whoever pays more money to get in there. So, like, even if the limit is reached, I don't think it'll be catastrophic to Bitcoin. In fact, there have been some attacks on the Bitcoin network where we've had a lot more transactions than can fit into the block, and the network hummed along just fine, and business carried on as usual, and there wasn't really any problems with it. So we're currently using something like maybe 8 to 12% of block size capacity with actual economically substantive transactions. I think we have plenty of margin for error and growth. And what I want to see is, I want to see the really hard computer science done, and game theory, and thinking all this stuff out, and also being able to figure out how to use the block size more efficiently. For example, the segregated witness issue. I just interviewed someone who put this live testnet up with segregated witness, and what segregated witness does is you use the block size you have more efficiently. So you're basically able to cram 4 times as much stuff into the same block. And so, that actually has kind of a much greater scaling effect. And then we've also got technologies like Lightning Network that are being developed, where we would be able to do trillions and trillions of transactions in a trustless way, and also instantaneously and provably trustworthy, that would be superior. So I don't really see the block size debate as being particularly imminent or important to get solved right now, and I don't think it should really be impacting the price, but I'm sure it does, because it makes some people uncertain about it, and they don't have enough knowledge about the situation. But that's kind of my overall view on that, and I don't think it's critical that we get it solved right now. I think that we have lots of different potential solutions. Let's just keep moving forward, building stuff, building use cases, and finding stuff that people will actually pay for. I want to find features that people will actually pay for, and those are the ones we should develop because people find them valuable because they'll pay for them. Things like confidential transactions that would make Bitcoin much more private than it currently is. I think that would be a really cool feature, which will be able to be done with this segregated witness in a very easy, backwardsly compatible way.
Trace, let's talk about being able to invest in Bitcoin. And, there's these Bitcoin ETFs that are popping up. You got the GBTC. Right now, it's currently priced at a premium over the Bitcoin exchange prices. And then you got the Winklevoss Bitcoin ETF. Can you give us your thoughts on these vehicles for regular people to be able to invest in Bitcoin technology?
Yeah, so this is a fascinating area. I talk with some of my friends about it on a regular basis, like the GBTC instrument, for example, that's run by Grayscale and Barry Silbert's firm over there, because it trades at this premium to NAV. It trades at basically like $600 a Bitcoin, and spot price is like $450 a Bitcoin. Like, why is that? And at the end of the day, I think we have so many different things going on. We've got tax implications because you can hold this GBTC in like your Roth IRA where you don't have the tax implications. There are just so many different ways that you can use Bitcoin to plan. For example, you could buy mining equipment and deduct it, and then you get this mining income stream like that. And of course, you could claim it as you should be claiming the mining proceeds as income, but you might buy the mining equipment in December, and then you don't have to pay the taxes on your mining income until like the following April, like 16 months later. So you've got all these different moving pieces when it comes to investing in or buying Bitcoin. I think the easiest and safest way is go buy some Bitcoin and move them into your Armory wallet where you hold those private keys yourself. Like, don't trust an ETF, don't trust a third party to hold your Bitcoins. Like, figure out how to hold and secure your own Bitcoins, because then you've got the private keys. We have this saying like, he who has the gold makes the rules. Like, you need to have the gold coin in your hand. If you don't hold it, you don't own it. It's the same type of principle with Bitcoin. And then after you've kind of figured out how to secure your Bitcoins and do it in a safe way, and you feel comfortable with that, you do it with maybe $100 worth of Bitcoins, then you can start buying more Bitcoin and securing it yourself. And then if you find a way like the ETF, for example, or you find that that'll work in a particular use case, then perhaps venture out and take on more risk investing in it that way. But we've just seen so many problems in the Bitcoin space where custodians have stolen the Bitcoins, like Mt. Gox. They stole hundreds of millions of dollars of Bitcoins. We've talked a little bit earlier about governments. I think the prime way that governments are going to confiscate gold is not necessarily like going door to door and taking it. They're going to confiscate it through the tax system. And they'll likely confiscate the wealth out of retirement accounts before they confiscate any wealth out of gold. And so likewise, it's going to be they tax the ETF, for example, like a Bitcoin ETF or something. So you have to look at like what's likely going to happen. What type of risk are you willing to take in your own personal situation? And I think we're in an environment where you need to reduce as many layers of risk as possible. If you hold this GBTC in your IRA account, well, look at all these layers of risk you've got between you and your asset. You've got the IRA, you've got the IRA custodian, you've got the IRA brokerage, like if it's E-Trade or something, then and then it's whether E-Trade actually holds the GBTC shares or not. Who knows how they're registered in street name or who knows whatever, right? But then even with the shares, you've got performance risk and counterparty risk with Grayscale. Whether they'll actually honor and give you your Bitcoins or not, or give you your gold or not. Or you could just freaking buy the Bitcoins and hold them yourself. And now you disintermediate, and you are not subject to all of that risk, right? And we're talking about you've got risk all over the place, and a lot of it is return-free risk. Like you got money in your bank account, you're taking risk, but you don't get any return. It's not like you earn interest or anything.
Right.
So like, why have dollars in the bank account, not have dollars under your mattress or something?
And there's risk either way, because it just depends, because you could lose the money under your mattress as well.
Yeah, or rats could eat it or something, which is actually probably a pretty good. Rats like to eat everything,
right?
And they eat a lot of Chinese yuan, right? And so, I mean, you got risk everywhere. And so, how can you reduce risk? How can you reduce the layers of complexity between you and your assets? And Bitcoin does that in a great way. Bitcoin does that. It really adds a lot of utility in that sense, because you use Armory, you're able to back up your wallets very simply, very easily. It's cheap. It's absolutely free. Armory is completely free, open source to use. It's kind of my gift to the world, you could say, funding the development of it. I mean, it's free. It's not like you got to pay monthly storage fees like when you're holding gold. Yeah. It's not like you got to pay insurance. You back this thing up, you go bury it, bury several copies of it throughout the world, laminated in like a little MTM storage box with GPS coordinates, so you can go find it. I mean, you can secure the protection over your wealth and over your assets for a much lower cost with Bitcoin relative to the other options out there.
Wow.
And you don't need SBIC or FDIC insurance or any of this stuff, right? Like if you hold the Bitcoins themselves.
Yeah, because you're not actually like lending it out. And
Which is what's really. This is the big picture. We are transitioning from the industrial age to the information age, and we're transitioning from a debt-based monetary system and currency system and financial system to an equity-based monetary and financial and currency system. And Bitcoin, just like gold, is an equity-based asset. And it's an asset that you can hold the private keys yourself as an individual. And that's a big, big, big deal. And there's trillions and trillions and trillions of dollars at stake and up for grabs during these two gigantic transitions.
Yeah. Wow. That's incredible, Trace. So closing thoughts, just your final thoughts on Bitcoin, people's perspective, how they should see, how you encourage people to see Bitcoin. And, I don't know if you want to talk about one of your websites or talk about Armory a little more. Just your closing comments for this interview.
Yeah, so I suppose in the closing comments it would be, a lot of people looked at those horseless carriages and they're like, where's the horse? And the person's like, well, look, we don't need a horse. It's an internal combustion engine. We have this oil and gasoline and all this stuff. And they explain kind of how it works. And the person still thinks like, but where's the horse? Right? They just can't change the paradigm. They can't even ask the right question. That's what we're dealing with here. We're transitioning into the information age. You know how to send emails, right? You know how to browse on the internet. You know how to shop on Amazon. Bitcoin is new technology. At the very minimum, learn how to use the new technology. Put in that effort. Put in that homework. If it takes a couple hours, it's kind of fun. Learn how to use the new technology. I think that's really what kind of a big deal is. I think that's something that's very important for everybody to do. And learn about the new technology if you're interested in it. Like my Bitcoin Knowledge podcast, I try to do interviews with all the top people. They're all CEOs pretty much from all the Bitcoin companies working on their own little thing. And I try to craft the interviews so that they're going to be relevant 6 months later or a year later or even 2 years later. We don't talk about the current news, for example. So, go listen to a lot of these old episodes. They're really actually very insightful and still relevant and practical today.
Yeah.
So if you want to learn about Bitcoin, you got to get on the bike. You can't just read about it. You can't just learn about it. You got to get on the bike and try to pedal around. That's how you're going to learn it. That's how you're going to learn the new technology. And once you get more familiar and more used to the new technology, then you can decide whether you want to allocate more capital into it or not. But what's really, really painful for people is when they're ignorant. right? Because then they don't have options.
Yeah.
You know, like if you're ignorant of Bitcoin, if you're ignorant of how to actually secure your Bitcoins and stuff like that, then the issue of whether you should buy any Bitcoins is not even ripe. Like you can't even ask that question because you don't know how to secure it. I mean, it's really like ignorance is really, really expensive, and personally, like I don't really have a lot of time to spend like trying to educate ignorant people because they choose to be ignorant. You know, we got all these free advice and all this free stuff about Bitcoin out there, like all these podcast interviews, all this stuff. So, you know, that's what I'd kind of recommend. If people want to get started with Bitcoin, a very good site for new users is weusecoins.com, and then also bitcoin.org. And then my podcast, you can actually find it at www.bitcoin.kn, kind of like knowledge. And you know, go and get yourself educated on it. Don't be ignorant. Give yourself options, you know, and then decide whether or not you actually want to buy some Bitcoins or not. Because and also, you know, when people all start buying Bitcoins and the price starts going up, and like everybody's chasing the rabbit, and then nobody has time to like spend with you one-on-one because everybody's trying to buy it at the same time, right? So, you know, try to get educated and try to figure out how to use it while it's not crazy and hectic is another piece of advice, because human capital, knowing how to do a lot of these things, the time of being able to ask somebody who does know how to do these things, like, you know, that's all a form of capital. You know, just human capital, intellectual capital, that's just as much capital as like a piece of real estate or a computer or a piece of property, plant, and equipment. So it's developing that human capital, it's developing yourself. That I think is the most important thing, and it's a great hedge against inflation. It's a great hedge against deflation. Nobody can take away from you what you are and what you know. So, you know, that's always a great place to allocate some capital and time.
Wow, Trace. Well, there was a lot of inspiration across the board, and with what you said there, and you know, great inspiration for people to get involved, understand Bitcoin, and not be ignorant. So thanks so much for taking the time to share your wisdom with us today, and it was really great to talk to you again.
Yeah, great to talk with you too. We'll do it again sometime later. Bitcoin price will probably be higher. It'll be exciting.
That seems to be the case every time I talk to you, so I wouldn't doubt it at all.
You aren't the only one.